glorify, pedestal, honor, elevate.
We gon' elevate and motivate, inspired to be great. Yesterday is yesterday, today is a new day. So if each one can teach one, we can all make a way. Elevate, elevate, elevate and learn. Elevate, elevate, elevate with Verne.
Hey everybody, April is Financial Literacy Month, and I, Elevate with Verne, will be giving you the 8-minute tip all month long. So stay tuned to see what tip is up next. Welcome back everybody to Elevate with Verne. So this is the month of April, which is Financial Literacy Month, and this is your 8-minute tip or more with Elevate with Verne. This section we are going to be talking about credit card tips. So you know how when you get those mailers in the mail and it says, congratulations, you're pre-approved, or congratulations, you qualify for this credit card? I need you to take it, I need you to flip it over, and I need you to read what it says in the back at the very top. If that says 25% or more, I'm going to even take it lower than that. If it says 23% or more, 23.99, I need you to rip it up in the garbage ASAP. And why? I'm going to tell you right now. So first, if you are going to apply for that card, I want you to make sure that you're going to do your homework, and we're going to get into that. But if you're not going to do it, if you're not going to apply, I need you to take it and shred it. I mean, shred it to the gods, okay? I need you to shred it and rip it up, because there are scammers out there that will still take your credit card information, that flyer, out your garbage and apply as if they were you. So if you're not going to apply because the APR is too high, I need you to shred it and throw it in the garbage. Next, we're going to talk about if you are going to apply. This is where I need you to do your homework. So get your pen and papers. I'll wait, because I'm getting ready to tell you some tips that are going to help you, baby. Okay? Yes, elevate and learn. Elevate with Verne. Okay, first, if you are going to apply, I need you to be proactive. I need you to get a spreadsheet. I need you to take that spreadsheet. I'm looking at my notes here on my phone. That's why you see me looking down. And I want you to first figure out, do you want a secure card or an unsecured card? We're going to do that first. So if you want a secure card, know that a secure card is your own money. Sometimes they want you to put up $200 to $300. It requires you to have that kind of upfront money, depending on your credit score. Okay. An unsecured card is where you use their money, where they give you money. If your credit score is low, and I'm going to say 600 or below, there is a chance you may get a low limit, which could be $250, $300, $400, or $500. We're going to go with $250 just for the sake of this video. But if you pay your credit card on time, every month, whatever it is that you have to pay, we're going to get more into that in a minute. If you pay it and you are being credit worthy, because that's how they're going to see you. Are you worthy of this credit? Oh yeah, they've been good and they've been paying on time for 6 months. There is a chance that they may increase it. Normally, when they increase it, they double the limit. So if they gave you $250 and you were good for those 6 months, they will increase it to $500. Same thing if they give you $500, they will increase it to $1,000. Okay, so that is an unsecured card. So a secure card is where you use your own money, $200, $300, and you just pay yourself back. That's if your credit is not so good. Okay. Next tip. Getting a credit card, it does go by your score. It is under your history is under 600 points, or your credit score is 600 or less. There is a chance that, again, you'll get a lower limit. Okay. The higher your credit score, there's a possibility for you to get a higher limit. Paying your credit card on time is super important. This is where they may increase your credit limit. So use it wisely. And again, get your spreadsheet, because we're going to get into this right now. If you are getting a credit card, a soft inquiry will not show on your credit report. Okay, so a soft inquiry. A soft inquiry is when you pull your own credit report daily, weekly, or monthly. That does not affect your credit score. Soft inquiries are okay. Also, employment, insurance, like quotes for life insurance or car insurance, that will not necessarily affect your credit score. Now, a hard inquiry will affect your credit score. This will show on your report as someone pulled your credit and now it will stay on there for 24 months or 2 years, whichever. It's the same thing, but I'm just giving you that number. So applying for a credit card, applying for a mortgage, applying for a personal loan, applying for a car loan, applying for an apartment rental. These will show on your credit report and they will be a hard inquiry, okay? So it's a difference between soft inquiry and hard inquiry, okay? So quotes for insurance will not show, but when they go to run it for you to purchase the actual life insurance policy or purchase an actual vehicle, that is when it will, okay? Next tip. When you're starting this spreadsheet, what I want you to do is get an Excel sheet. You're going to have 4 to 5 columns, and this is what you're going to put in the column. The name of the credit card. Okay, you're going to put that across the top, each credit card. Let's do 3, right, for now. You're going to put all 3 of the names of the credit card, and down underneath the credit card, you're going to put comparing the offers. Are they giving you points back? Are they giving you grocery points? Are they giving you gas points? Are they giving you dining points? Are they giving you streaming services? That is something that they do. They give you points for streaming services. My phone is falling out. Cashback rewards. Hotel or car rentals. Transfer balance. Transfer balance is when you have a credit card that has, I'm just going to give you this number, 5,000, and it's really high, and the APR is, let's say, 30%. You got this new credit card, and the APR is 10%. You can transfer that 5,000 from this card, put on this card, and that will lower your balance. Now, this card will be paid off, so don't use it unless you put on there a small bill that you use monthly, Netflix or something like that, okay? So you don't want to increase that number. So this will make your score increase because it seems like you paid off that 5,000, but don't forget that 5,000 is now over here on the lower APR rate. If you want to know more in detail, just leave me a comment and I'll break it down for you in a different video, okay? Also, I want you to look at the back of that credit card form. You're going to flip it over in the back where it has the APR, and you're also going to see, is there a yearly fee? Is there a monthly fee? Sometimes they charge a $75 a year fee, and then after that, they charge you $13, $14, $15 per month. You don't want that. That's too much. Also, they may say it's $99 for the first year, or they may say it's free the first year and it's $99 every year after. Or they may say it's $75 up to $125 per year. You do not want those. You want those that say 0 APR if you can get it. If your credit score is low, you are going to have to work your way up to get it at a better, higher level and a better standard where you can say, no, I don't want that. I will not accept that. Okay? So you don't have to accept every credit card offer that comes into the mail to you. Again, use your spreadsheet to see the differences. There is a new CFP rules, which is Consumer Financial Protection Bureau. So it's CFPB. Okay? That is now going to be a cap on your late fee, which is going to be $8 for credit cards. This is going to be awesome. It is not into effect yet, but it will be going to effect soon. Keep an eye here for more updates on that. Again, it's called CFPB, Consumer Financial Protection Bureau. Next, your payment history. Your credit utilization, meaning how much credit are you using. They kind of want you to keep it low at 10% to 30%. We know that with a lot of people, that's not possible. But if you can put it at least 50% of your credit card, if they gave you $100, if you can keep it at $50, if you can pay it off to $100, that will increase your score. But remember, the more you use, the less your score is going to increase. And it may even decrease. So make sure you're using it wisely. Again, if you want more on that, I will make a separate video. Okay. The account average of how long you had the account and newer credit. So you could have had a credit card for 10 years. Then you got a new credit card 2 years ago, right? So that's 12 years. They're going to take that 12 years and they're going to divide it by 2, and that's going to be 6 years. It's going to be the average of your score. I know. Why would they take the 10 off, right? The 10 will still be there, but it's going to average it. Just an FYI. Also, if you have a car note or a mortgage and you pay that off, that will decrease your credit score, and it's going to decrease quite a bit, y'all. I do want to warn you of that. However, if you pay your bills on time between 3 to 6 months, you will see the increase. For me, my credit score was 708. My student loans were paid off. As you guys know, some people's student loans was paid off. Well, mine went on my report, and it decreased my credit score like almost 80 points. Yeah. However, because I paid bills on time that was in November, and it just increased last month and went back up like 90 points. So I basically got all those points plus a few more back. However, it's going to go down again because I just paid off a major bill. So just know when you pay off a major bill, it goes down from 50 points or more. It could go down up to 100 points depending on what that major bill is that you're paying, a house, a car, how long length of that bill that you're paying off was. Did you have that bill for 8 years, 7 years? A car, did you have a car for 6 years and you paid it off? So that 6 years is going to come off. But just remember, just keep paying it on time. It will increase. Don't worry. Okay? Your mix of credit. Do you have a house? Do you have a car? Do you have a personal loan? Do you have a student loan? You want different mixes of credit. That looks good on your report. Also, the activity. Don't apply for too much credit. There are circumstances to this, and I'll get into that. You don't want to apply for 6 different credit cards today, tomorrow, next week, all in 1 month. It's going to look like you're desperate for credit. Where this does not apply to is house and cars or some personal loans. Why is that? Because they're going to look at it as if, okay, you're going for a mortgage. You want to get the best rate. So you may go to 6, 7, even 10 different banks to get a better rate. They're going to count all 10 of those inquiries as one. You may see them listed on your report. Okay, Chase, Bank of America, Wells Fargo, you may see them listed, but it's going to count as one inquiry. So in 2 years, 24 months, when that time comes around, they're all going to drop off. Okay, so just know that it's not you have all of these house, a car, some personal loans. They know that you are looking around for the best rate. So in those instances, those will count as one. Okay, so keep that in mind. However, if you're applying for 7, 8 different credit cards all at once and you're getting denied, that's going to be awful. So if you're going to do it, I would say do one, wait 3 to 6 months before you apply again for another credit card. That's just my observation, okay? Do your own research. I'm just giving you tips that can help you and work for you, okay? Also, the limits could be between 35 to 40% for payment history, 23 to 30% for credit usage, 15 to 21% for account age, 10 to 11% for a mix of credit, and 5 to 10 for activity. So it does vary depending on which financial bureau you're using. TransUnion, Equifax, and all of these different ones, and Vantage scores, and all of them are different. So just giving you a roundabout. Also, with your FICO score is what they use for credit cards, homes, personal loans. Your Vantage score, that number is just there to give you an average of approximate how much your credit score is. And I'm going to give you an example. You look at your Vantage score on Credit Karma, and it may say your credit score is 725, 720, 680. That is because they're not all calculating or they're not all reporting at the same time. However, those numbers could be 50 to 100 points lower on your real FICO score. Okay? So your Vantage score is just there to give you in your head, okay, oh, my credit score is about this much. But it could be 50 to 100 points different from your actual real FICO score. And you can see that on Experian, which is a free one that they have right now, or you can pay for the paid version. But the Experian will give you your true number. Your ones that you're getting from your bank, if they're using like Savvy Money and stuff like that, most of those are from your Vantage score, which is like Credit Karma, Credit Sesame, and all those, okay? Wallet Hub. However, if you want your actual real FICO score, you can go to www.annualficoscore.com and you can get your real FICO score. As of now, they're doing it once every month. And that was due to COVID. I don't know if it has changed as of today. Things change all the time. But prior to COVID, you could get it once a year, okay? Now, since COVID, they were doing it once a month free. Again, do your due diligence and go and check it out on your own. If you have any information on this, please put it down in the comments. Please be respectful. I would love to hear your feedback. But again, be respectful when you do it. As of this taping, things could change. And by the time you see this video, it could be something different. So, give me grace, okay? I'm trying to help you out also. So, this is Elevate with Verne. And this is your 8-minute financial tip for the month of April, which is Financial Literacy Month. I love y'all. Be kind to one another. Go out there and spread love and spread light.
Elevate, elevate, elevate with Verne. Heighten, rise, voice, promote, upgrade. Elevate, lift, transcend, uplift, jump. Elevate, raise, glorify, pedestal, honor. Elevate.
We gon' elevate and motivate, inspire to be great. Yesterday is yesterday, today is a new day. So if each one can teach one, we can all make a way. Elevate, elevate, elevate and learn. Elevate, elevate, elevate with Verne.